Okay, let's go ahead and get started here. So this is a trade I'm going to review from August 1st Tuesday, August 1st. It was a puts trade I took that I lost on, and there's a lesson here. There's a price action lesson that told me to get out of the trade. It told me to get out of the trade early on, but I kind of ignored it because I was a little too confident in my system. So I'm going to go through this here and make this video to show the price action lesson. So I have it on demand here, 10:11 a.m. You can see here we had a calls move off the open, made a nice little push, and it came up and hit this resistance level here at 457.25. 457 was a very big resistance level from the day before, so that's why I did not take calls. I did not think there was any upside potential after yesterday. So we came up here and hit this 457.25, and then we started to push back down. So now I'm getting interested in puts because I like to see these moves where we come up, we round off, we hit a resistance, and then we push below the EMAs. And typically what happens is once you push below this 21 EMA, which is this white line, once you push below there, you typically get a really nice flush. So I like to trade these put moves once you have this kind of rounding off, lose the EMAs, and the flush. So I'm starting to look for puts here, but I do not have the setup that I like to see. I like to see the MACD here have a sell signal, which you do not have at this moment. You need the blue line to cross below the white line for a sell signal. I like to see the 8 EMA cross below the 21, so that's the purple line cross below the 21. So I have a MACD cross and an EMA cross, and then I'm also don't enter until you are below all the levels or below all the EMAs. So right now we are below the 8, we're below VWAP, but we still have the 50 EMA as support, we still have the 21 EMA as support. So I want a candle to be solidly below all of these dynamic levels and have the EMA cross and have the MACD cross in order to take puts. So I should have had this playing while I was going here. So I'm going back and rewatching it. You can see the candle now is pushing down to the 50 EMA. We'll watch how it develops here a little bit. So puts are looking good, but it's now bouncing off of the 50 EMA, which is that light blue line. There we go. Push back up over VWAP. These dynamic levels are really tricky. So we'll watch how this enters here. I'm going to try to simulate my trade as best as possible. So I know exactly what time I entered the trade. I entered at 10:20:11. So there's 8 minutes until I enter the trade. But I want to watch how it develops here. So I'm not going to say a whole lot. I'm just going to watch the trade and point out things to myself as I see them. Right now, we're still holding over the 50 and over the 21, but we are pretty solidly below the 8 and below VWAP. The MACD has the dark green bars are there, which means a loss of buying momentum. As they get smaller, that's less and less buying momentum and more selling momentum. Oh, there we go. Beautiful push down below the 21 EMA. You can see the selling volume. Oh, shit, that was a big move. I don't think these contracts are right. They definitely should be more than that. Anyways, very nice big move there on that candle. You can see the volume down here. We have red selling volume increasing. Very nice to see. This is why I don't like on demand though, because it shows these really weird spikes in price that aren't really there. So on demand is okay, but it's not the best because it shows wicks that aren't really there. Nice move down. Nice move down. So now, at this point, puts are looking really good. Unfortunately, I don't have the MACD cross and I don't have the EMA cross. Those are two things that I need to see in order to enter a trade. So at this point, I'm waiting. I'm waiting. I don't remember the move being this aggressive. I think OnDemand. I've had this happen before when I've watched things on OnDemand. It's not 100% representative of what happened in real life, but it's close. So we've now pushed down to the 456, which is a weekly support. That's what the color purple is, weekly support. White is a like a 5-minute support level. Came from the 5-minute chart. So the MACD is curling down now, but still has not crossed. I've gotten stuck in a lot of trades where the MACD comes down like this, it touches, but it doesn't actually cross, and then it kind of bounces away and you get stuck in a fake breakout. So that's a very nice move. These contracts, I don't know if these contract prices are right over here. This is the right contract, 455 puts, but the price isn't moving that accurately. So I don't know how well this is going to work. But I'm going to hit buy at the same point that I hit buy in real life, and I'm going to show you what's going to happen. So right now this trade is looking really nice. This is the flush I love to see. You kind of have a MACD cross here, like just barely starting to form, but you have to wait on these because I've gotten burned a lot when it looks like it's crossing, but by the time the candle closes, it doesn't actually cross. So you have to wait and be patient. Also, you have the EMAs have not crossed, and you'll see why in a second here. But so far, a very nice move. A lot of nice selling volume. We're now solidly below all the levels. We're below the support. Next support I have is 454.84. So this is I mean, if it were to keep going down to 454.80, that's like 100-some% move, possibly 80%. I don't know. It's a lot. Nice candle. Beautiful, beautiful puts move so far. But I have not entered at this point because my indicators have not lined up. I have gotten burned a lot of times by entering before my setup is fully there, which is really unfortunate because this was really a really nice setup. The only thing missing was that I didn't have these crosses yet that I need to see. So we're just going to kind of watch it here. Wick back over 456. Still 2.5 minutes left in the candle. Contracts are, yeah, these contracts are definitely lagging. My entry in the contracts was 103. Definitely doesn't seem right, but that's okay. Maybe I won't be able to simulate the contract prices that way. 2 minutes left in the candle. Some buyers stepped in there. That's actually a pretty big wick. I do not remember the wick of that candle being so large. So right now we have a little doji candle. Undecided what they're trying to do. Significant drop in selling volume. Holy crap. And there we go. Nice follow through as we get closer to the candle. See, there's that silly weird, now the chart looks terrible because of that fake freaking spike that comes in these OnDemand. Now it looks all weird. or whatever. Once this is done, I'll show you what it looks like, the actual chart. But very beautiful puts move. Sellers came in big time there. Big push down. So, but we don't really have the, I don't know why I waited so long on this move. This has already been a fairly big move, but I still have not entered. I don't enter for another 40 seconds. And my thought process is, this is finally starting to look like it's crossing, and the 8 has not crossed the 21 yet. So I'm waiting for all those things to line up. We also have this support over here pre-market. See the support right here? So we have a support level at like 455.70. So, okay, 1020. Here we go. I'm about to enter. I'm going to hit buy the market. There we go. 3 contracts. I am now in the trade, pretty much at my real life time. Beautiful setup so far. All we have to do is lose this support right here, and we are off to the races. Just have to lose the level. Just have to lose the level. It should be easy. I'm thinking it should be an easy to lose this level, because all it is a little bit of pre-market support. Now we're waking up. And I need to zoom in a little bit. So, okay, still looking good. Very nice volume. Look at the volume. 4 bars in a row of increasing volume. MACD is fully crossed now. EMA is crossed. So I have everything I need to see. Again, 8 cross below the 21 is a sell signal. MACD, the blue cross below the white, is a sell signal. You're below all the EMAs. You're below VWAP. You're below support. The only thing holding this trade up now is this support over here, pre-market 455.70, and it looks like we're going down. We're pushing below it. It's looking very nice. Very nice so far. Everything looks all right. So one thing to note that I didn't notice, I remember this trade being I thought it was a much more instant signal that I should not have entered, but this is actually looking pretty good, and we're 2 minutes in. Okay, here we go. So now we're forming an inside bar. We're really struggling at this level here. Pre-market support. We have 2 wicks on it. Very low volume, like almost no selling volume at all. And now we're forming a green inside bar. So at this point I'm saying, oh shit, I need to get out of this. This thing's going to pull back. And this is the lesson of the video. So let me pause this here. So I've been in the trade for 2 minutes, about 2 minutes. So I entered right at the open of the 1020 candle. I've been in for 2 minutes. Let's see here. Is this right? Yeah, this is right. So 10:20:11 is when I entered. And now look at what the price action is showing. The lesson of this video is that when you see this scenario play out, you are effed and you have to get out of the trade, because most likely it's going to pull back to the 8 EMA. This was the tricky thing with this trade, is it made a really nice move. So it rounded off, it lost the 21 EMA, and it freaking flushed. That's right what I like to see. The only problem is I did not have these 2 signals lined up. Typically when this happens, you will get the MACD will cross over here, and then the EMAs will cross, and then you'll get the flush. This one was strange in the fact that you got the flush before the 2 sell signals were given. So that's why I waited so long to enter this trade. In hindsight, watching it back now, I should have entered a lot earlier, just because of what the candles were showing me And I know that once we make a push below this 21, we are most likely going to drop. I do not remember the volume looking like this. I do not do a good job of watching volume when I trade, typically because the bars get all jacked up and I can't really see them. So I need to kind of zoom the volume in to get it to fit better, right? Because looking at this, you have a very nice increasing in selling volume. You could have gotten in on this candle and ridden the momentum, right? So another mistake I made is we went level to level. So markets will go level to level. We had a level here that we rejected. We came to this level, we rejected it. And what did we do when we rejected 457? We went right to the next level at 456. What happened when we lost 456? We went right to the next level, 455.70, this little support pre-market. So at this point, I had already missed enough of the trade that I should not have entered at this point. I waited too long to enter, but then I didn't wait long enough. I waited too long to catch this move, but then I needed to see a close, ideally a close below this support, in order for the move to continue. Because if we would have closed below this support here, we had a whole nother dollar almost to go. We would have went another 80 cents. So if we went 80 cents, the contracts would have moved probably $30. So it would have been a 30 or 40% move depending on what the contract price is at the moment. It just needed to lose that support. Unfortunately, I entered right at the support and didn't wait for a confirmation that we had broken the support. So that was my bad. I need to not do that. So the lesson, though, which is what I'm getting to, is even though my setup is fully saying you should be in puts, because I have the 8 EMA is crossed below the 21, MACD blue is crossed below white, below all of the EMAs, below this level, got room to the downside. Everything is lined up, well, except for this little support, which, my bad, I missed that. Everything's lined up, everything looks great, but I'm now in the trade. The problem is I'm far extended from the 8 EMA. Look where the 8 EMA is. The price is very, very likely to go to the 8 EMA, right? So the risky thing with taking trades like this is that when you enter down here, there is a high probability that the price will come back up here. And that is exactly what is going to happen. And how you could tell that is this small inside bar. I have noticed this many, many, many times, and you could look at a ton of charts of SPY or anything really. When you get a big red bar and then you get a small inside green bar, you need to get out of your trade because it is going to pull back to the 21 EMA or to the 8 EMA. It is going to go, this is your first indication that price is going to go here. And there is a lot of time still in the candle. There's 2.5 minutes in the candle. But the fact that this is forming, I'm starting to say, oh shit, I probably should get out of this because this is probably not going to work out for me. At the time, I'm only down like 3 or 4% on my contracts. So I'm like barely red at this point. And everything is there. So you'll see what happens. So we have our green inside bar, which is getting bigger. Not what you like to see. It's getting progressively bigger, small bar. So okay. Selling off a little bit. I don't know if the contract prices are right. If the contract prices are right, the contracts are at 95 cents right now, and I had an entry of 103. So that's kind of around like 8%, I think. Not sure if those are right or not. I think the contract prices are not fully matched up. Okay. So we still have a green inside bar. Green inside small bar. And it doesn't matter, it could be the opposite trade. You could have a big green candle and then get a small red bar. You're equally as fucked. But this is holding very well. Price is not pushing down. So for this move to have worked, this would not be a small inside bar. This would have continued to move. That's a nice little sell-off. That's not bad. I'm probably break even here, or slightly in profit. Probably not quite break even. Probably a little bit under. Oh, here. So my entry was $1, and I'm at like, so I'm down like 5%. My entry in real life was a 103, so it's not quite the same. Now, in the trade still, we have definitely got a green bar here. Oh, see, now the bars look better. When I reloaded the screen, those weird spikes went away on the bars. This is what it's supposed to look like. Okay, so anyways, I'm in the trade. We are 1 minute to the close of the candle. It was a green inside bar. Now it's looking a little red. Let's go watch how this plays out here. There was definitely opportunities to get out of this bar at break even. This could have been a break even trade. But the fact that I've been in here for 4.5 minutes now and we have not gone anywhere is also a signal that this is a losing trade. If for this to have worked, we should have had another large red bar, mostly shaved. Here we go. 7 seconds to the close. It's going to close. Yep, that's going to close as an inside bar. Okay. So now we have a small inside bar after a large red bar. That is a 100% sign to get out of the trade. We gave it some time. We were patient. Should have got out of the trade. I had plenty of time in those 5 minutes to get out. But my thought process in the moment was, okay, hey, you know, the EMA cross is good. Then we got the MACD cross. We got the red bars are opening up. So the MACD is opening up. Volume has died off. I did not notice the volume was so low on that green bar. That was a sign to get out. But now look, we're making a little red push again. So this would have been tricky. This is not as straightforward as I remember it, but that's why it's helpful to go back and watch these. So now this is looking okay. You're probably still break even here at this point. But again, it's been 6 minutes. At this point, 6 minutes in, we shouldn't be holding a level like this. We should have already moved down a pretty good amount if this was going to work. So the fact that we have a green small bar, plus it's been 6 or 7 minutes and we haven't moved down. We're wicking over the level. We have this support here. This is not looking too hot here. This current bar is another inside bar. So we have the large bar, inside bar, another inside bar. It's kind of looking like it's going to do a bear flag maybe. A little bit of move down, but it just can't lose this 455.70 level. Like, it's just holding it. That's one thing I'm getting better at, is recognizing these levels as they form real time. Um, but yeah, so it's just tricky because you have a small inside bar, which is the signal to get out, but then you have this bar here, and you're like, well, I'm at break even or slightly in profit. I should hold, right? No reason to get out. It's trying to push. It's trying to push. These contracts say we're at break even though. We entered at $1 and we're at $1. Another wick. Yeah. Yeah. It's just no follow through on the selling. Now we have a green bar. A green bar with a big bottom wick. Yeah, there it goes. Pushing back up to the level. Now, okay, it pushed up to the level, but look how fast it sold off, right? So that's a good sign. That's a good sign for puts. You push up to a level, you touch it, and you instantly sell off. You know, it's going sideways, but if you look at the 8 EMA, the 8 EMA is coming down and catching up. Sometimes these moves have to go sideways to let the 8 EMA catch up. So that's kind of what I'm thinking here. I'm thinking, okay, you know, we're not down very much. We're only down a little bit. All the indicators, everything says puts. We're just waiting for the 8 EMA to catch up, and we're waiting to break this support, and we're going to flush. So I'm just being patient at this point. Down a little bit, no big deal. According to this thing, we're down. It freaking does that. That's not what the price actually looks like. Stupid thing. Hold on. Let me reload this. I think if you reload this, it gets rid of those spikes. Yeah, I don't know why it does that. It's definitely not what the candle looked like. Alright, let's restart this. Okay, we're 30 seconds from the close. I find that the last minute of the candle is the most important. The last minute of the candle really dictates what's going to happen, right? So if you're in puts and the last minute of the candle is green, that's a bad sign. The first 4 minutes honestly don't even matter that much. So now you're gonna another green bar. Okay, we're 10 minutes into the trade. We're down like 10% or something. Not terrible. Not terrible. We're bear flagging. We're waiting for the 8 EMA to catch up. But we've definitely failed to go lower. At this point, we should absolutely be concerned the fact that we have not gone any lower. It's a nice little red move there. There was a lot of opportunity to get out of this trade for less than 10% loss. Like a ton. But if you look at everything else, the MACD still looks good. EMAs still look good. You're below the level. Now we're pushing up again. More green. Volume is the biggest thing I think I noticed going back and looking at this. The volume drastically dropped off. Very, very nice 4 increasing bars and then just died, right? So that's something I can take note of, is I need to look at volume more when I'm doing this, because, and there we go, we pushed to the 8, or well, close to the 8. These contract prices are all jacked up. Like, you're not down 5, you're probably down like 20% at this point in reality. So we pushed right up to the 8. Yeah, that's the biggest thing I noticed, I think, going back and looking at this. These first 2 candles actually looked pretty good. I can see why I stayed in this longer than I see. That now they're caught up. Now they're $80. So now you're 20% down. But that volume drop off was drastic. And then even on these bars here, just no selling volume at all. So, but at this point you're thinking, okay, hey, we're still below the 8 EMA. I'm still good, right? Nah, not really. So I think I'm gonna wrap this up here. I'll fast forward a little bit more. But basically it keeps climbing. Now it pushes over the 8. I've sped the video up a little bit. It does another stupid spike. Not real. Why does it do that? Dang it. I don't know why it does that. It's so strange. Okay. There we go. So now, yeah, now you're pushing over the 8, which means you're going to push to the 21 next. And there it goes. You're flirting with the 8, but you're pushing through it. Now you're at the 21. Now you're probably down 25% or more. And it's just going, you know. Decent, no selling volume at all. Like, absolutely no selling volume in those last 3 bars. It's just pushing back up. So yeah, there it goes. Just gonna progress on. So I'm going to, at this point, I'm gonna stop this, and we're gonna go look at the actual chart to see if it's cleaner. So here's the actual chart. Where are we at here? That was 8-1, right? Yeah, so here's the actual chart. Look at this and then we'll wrap this up. So here was that move that we were in. Here's the actual chart. So got in the trade right around here, pretty much right at the open. So it looked really good, as you saw when we were in it. But what happened? We had this. I'm going to take this cursor out, actually. A little pointy finger. No, I don't like that. Anyways, so we got in the trade. We had a small inside bar form after our large move. This bar is the first sign that you should exit the trade. You could have exited that trade for a 3%, a 5% loss. You might even have been able to take it off at break even. But you have to be really disciplined to say, okay, hey, this was the bad entry, right? It was a good setup. The timing wasn't right with the indicators. This support was here that I didn't wait for. I have this bar telling me, this tells me we are going to pull back. I should just get out of this trade and not hold through this pullback. Because what happens? You come up here, you touch the 8, then you touch the 21, and then you touch VWAP, and then you touch the 50, and then you're up here. And you're royally screwed at that point. I closed somewhere in this area, probably like right around the 21 EMA, because I was way too confident in my setup. So I was like, well, it'll come up here. It can reject the 8. It didn't. Okay, it can reject the 21. It didn't. Okay, now I should get out. Conversely, the right thing to do would have been, once you get this bar that forms here with very low volume, that's a sign that puts is not going to work, and just take the loss and move on with your life. So that's the lesson for today. I really need to ingrain that in my brain. So, and where's my paper? I had a good note here that I wrote for this lesson. It is called, where is it? Where did I write this? Small inside bar equals small loss. When you get a small inside bar, like this 1020 bar, small inside bar, small loss. Take the small loss because you know about price action and you know that it's going to do this. It's going to pull back like this. This happens all the time. It happened the other day. What day was it? That day we had a really big move. Was that yesterday? Yeah, yesterday. Same thing happened. Really nice move. Kind of a trend day. We came over here. Same thing. Look at this. Everybody was waiting all day for the break below 450. Really nice bar below the 450 level. You're below all the EMAs. You have a MACD sell signal. You have good volume. But what happens? You get it closed below the level. A whole bunch of people bought puts right here because everything looks great. You just lost 450. You're thinking, oh man, this thing's going to go right to 448.50. And then what happens? You get a small inside bar form, and then price pulls back to the 8, to the 21, and up here. So as I wasn't in this trade. I was watching it because it was at the end of the day, and I'm like, oh man, those people just got fucked. Whoever bought puts at the open of this candle got fucked the same way that I did the day before. So this is a really useful price action tip that can help you stay out of taking big losses, because at this point you're not down very much. Like, you can get out of this trade for like a 5 or 8% loss. That's no big deal. Don't let it become a 30% loss like I did the other day because you're too confident or whatever. Just take the loss and move on with life. It happens all the time. You always see these big bars and inside bars that show a pullback. So that's the lesson for today. That's what I'm going to ingrain in my brain. I'm not going to hold losers forever. It's okay to take a loss. It's not a big deal. And when you see a small inside bar, just bail out. Well, okay. That's the lesson for today. Thanks.